Hey traders, this is the Shannon Man and happy Wednesday. I want to welcome you guys to a midweek update. Hope everyone's having a good week and taking advantage of this little bull rally. For now, guys, the bulls are in control. We're moving and grooving higher, and we shall see if that continues the rest of the week. But we do have a few catalysts, guys, that I want to start by covering. And then, as always, I will share my focus list, a few setups that I'm watching, and of course, let's go finish the week strong. With that being said, guys, let's dive right in here and talk about some catalysts for the week. So it is our first week of August. So far, it's been a pretty good one. If you take a look here, guys, we've had a little bit of chop and finally starting to break some of these major ranges and really running into some major key levels and trying to fire some squeezes. But again, guys, more importantly here, some catalysts ahead of us. One of them is on Friday, where we have our NFP, which is our non-farm payroll, and this is a pretty big job report. Right now, guys, we'll see how much weight big money is putting on this job report. Obviously, we'll know Friday morning. It comes out before the bell, and we'll see the reaction. However, guys, a few other interesting catalysts here. Tesla has their shareholder meeting tomorrow, August 4th, on Thursday. And on here, guys, they're going to vote on the 3-to-1 stock split. Don't know why they wouldn't approve it, but anything can happen here, team. So we'll see, guys, what happens from that meeting. What's the news on the split, and what does Tesla do? This can not only impact the market, but obviously offers some good opportunities within Tesla. And then just one little note here, guys. Another catalyst here is the Senate is going to vote on a new $7,500 EV credit before they break for August recess on Friday. So just another catalyst here, guys, that could impact Tesla, impact other EV makers, just something to keep an eye on. But other than that, guys, let's go talk about the market. So if we take a look, guys, at ES here, not looking too far back, we really have been turning around nicely, getting off of the bottom, squeezing, and then making a nice continuation. So last few weeks, guys, from that Monday to Friday, we really spent most of the week squeezing and then really breaking out towards the end of week. And on Friday, got to some really monster levels, getting back through that 4,100 and closing above it. So as we started to get, above this major zone right here, team, we always want to, again, just follow zones for what they are. If this, then that. Where if we do not break back underneath this key zone, then we're going to continue to hold up. And same thing as if we do not break outside of the zone, we just continue to squeeze and continue to squeeze. So to dive a little bit deeper here, guys, actually just want to zoom in on this picture so we can talk about some key levels. So a few important key levels here, guys. One is we want to focus on this 4081 level, which is from Friday's low of day. This was a huge level on Friday. That's when we had broken that zone and really just ripped off of this key level. And more importantly, when we hit it earlier in the week on Tuesday, we ripped right off of it and have not gone back to it since. So that's a pretty large level. Another level, guys, is this 4074. It's kind of hard to see right now, but this red line, and that's the daily cloud top. If you use that indicator, follow me in trading, and you've probably heard of it. But if you guys use the Ichimoku cloud, the daily cloud top is right around that 4074. So it kind of helps create this little, baby intraday zone within the larger zone of 4100 and 4056. So again, guys, generally speaking, as long as we're above this little baby zone of 4081, the market is definitely very bullish. If we start to break that, we'll pay attention to how 4056 goes. But if that finally cracks, that should signal a good pullback towards 4,000. However, guys, to the flip side, ever since we created that Friday low, we hit our zone nicely and we failed. Hit zone nicely and failed. Pulled back, hit that level, and stopped again right at that zone. Bottom edge of the zone, guys, is 4144, and upper edge is 4167. You can see for today's session on Wednesday, while we chopped, we started to get a really nice 4-hour squeeze, right? I won't zoom out again, but you guys could see the last squeeze exploded. Market takes its time to hold levels, starts to squeeze nicely. And today we're starting to get that momentum shifting in the right direction. We broke a new high of week and we hit the upper end of that zone, right around that 4170-ish. So from here, guys, want to pay attention to see if the squeeze continues to fire, see if the market really continues to hold up strong. Next key level and zone that I will be targeting is as follows. So again, guys, if this squeeze continues to release and we get that momentum, want to pay attention if the indexes start to hold the upper now bottom end of this zone, this 41.44. If we can kind of find our feet there, not lose too much momentum with the squeeze, and then quickly get back above this key level, my next target, guys, is 41.89, and then focusing on psychology of 4,200. And then my upper zone here, which is my true next target, is going to be 42.12-ish. Through that, 42.60, but one step at a time. So again, guys, as simple as this. If we continue to hold, let's see if we break out and work our way towards the next key level. If we do fall back underneath that 41.44, well, then we're probably just going to go back into a chop fest. And again, this will turn into a pullback if and when we start to break under that 40.80-ish. Until that, guys, if we do fall back in these ranges, it's just the same old song and dance of, buying the dip and selling it when it gets to resistance, right? But until this makes up its mind, let's see what the market wants to do. Hope that makes some sense here. So if we take a look at NQ, this has by far been the index that is leading. It made that low on Friday and did not go as low as ES did, where ES, guys, hit that Friday low. Tech was the only index to actually hold up and create a higher low, giving us some structure to start to keep an eye on. Just like ES, guys, it is squeezing nicely. It's starting to really explode, release, and lead the overall market. So right now, guys, I'm using the Squeeze Pro from Simpler Trading, and we have the red dots firing to the black dots, and we'll see if we have a little bit more momentum left to carry technology. Very important, guys, to watch NQ, because right now it is the leader, and it's going to lead up and most likely be the first to slow down and then start to take us lower. But for now, team, same thing here. As long as we are generally holding above, this 1274 and especially this 12.9, very bullish, even if we do pull back, right? So when you pull back here, guys, want to pay attention if we start to hold the upper end of that zone, kind of potentially retest that 13,150, and then continue the journey up towards these next major levels here, call it 13.4 to 13.5. That's my next target here, guys, at NQ. And again, you can see the exact levels here. I'm just rounding up. But if we do fall back under this key zone, well then, guys, again, I expect us to fall back into those ranges, maybe go and retest that structure here, right? If we do not hold, if we do, targeting there, back under it, we'll see, guys, if we head towards that structure, towards those key levels, and just start to consolidate. But in order, guys, for us to really break down, market's going to have to, truly turn around. And right now we've been pumping higher, breaking some big levels, some big structure, and we want to continue to ride that upside momentum, right? And continue to follow the money. So if we take a look at VIX, very important here. So let's cover this and then we'll move into the focus list. If you guys look at VIX from a very big picture chart, you can see it on a daily chart. I guess I'll show you the daily. Going back, guys, to November of 2021, heading into this year, we created that low of about 14. And from here, I always start to track structure. And I'm targeting, guys, taking this key wick and attaching it to here, and then also attaching it to here when we ended up going a little bit lower, giving us a little bit of channel of structure to start to observe. So you guys can see with VIX, every time it gets through here, it starts to top out. And that's when the market starts to bottom, when it gets sold off. Recently, right, these past few months, we've gotten near that 35. And we've taken a really good reset for the market. Right, this has been the best reset, guys, in a while. And I encourage you to understand the same relationship here. Last time that we failed at 37, 35, we made the reset down towards this bigger picture structure. And all we did was hold and then do it all again. And the market imploded. When we got to here, we pulled back, but we didn't quite go as, go all the way back as we did. VIX held up and we continued to drop. But eventually we got near those highs and we finally got the big picture reset. So again, guys, as the market nears these major levels, really want to pay close attention to VIX at this structure where it's going to work in, one of two ways. It doesn't matter if you're bullish or bearish. If VIX starts to hold here and turn around and get through 25, well, then the market, guys, is going to start to drop, obviously. And that 25 is really a big inflection point, or we can have the bounces off a structure, but if all it does is fail at 25, market's still a bit bullish. But if it does hold here, team, we can start to reverse on the market. And again, through 25, we're starting to sell off now. But vice versa, if the market really wants to give a strong pump and keep pushing, ideally, guys, VIX breaks this structure, starts to go and target that 20 to 18 key level. That would be a really monster move here for the market. But again, guys, no bias. Want to pay very close attention to VIX now that it's arrived at this key level. Let's see what happens. So, got a few setups for you guys, but I hope you enjoyed the market analysis. And remember, guys, everything stems from the overall market. That's why I start with it. That's why we need to understand it. That's why we need to follow it as a roadmap. No matter what you're generally watching, most stocks are going to obey the bigger picture. So again, hope you guys enjoyed that. And let me cover 4 of my favorite setups. So one of them here, guys, is Shopify. This is something I've talked about over and over and over. And if you've traded with me live this year, you've probably traded shop with me. But this is one, guys, that's just been, simply a beautiful rinse and repeat. And I want to continue to focus heavily on this one. Where generally speaking, guys, every time it gets to 40-ish range, it fails. Every time it gets to 30, it explodes. It gets to 40 and fails. It gets to 30 and explodes, et cetera, et cetera, et cetera. Around this 40 range, guys, shop does not have fun. Around this, it gets bought up, no matter what's going on. Even on their last earning report, it dipped underneath it, recovered, and has exploded. And of course, shop is reaching, guys, one of the highest peaks that it's reached since it actually gapped down to these levels on earnings. So it has not been back to this upper end of it in a very long time. So for shop, guys, want to continue to just focus heavily on these basic principles where we got to understand at some point, it will not keep doing this, stopping at 40, 30, 40, 30, 40, 30, right? It's going to eventually break out or break down. It could do this for years, but we got to be realistic here. So I am very open-minded that if shop fails at these key levels, guys, getting that pullback like it's continued to offer with my first target of 38, if and when it goes back under this 40-ish key level. While it is above 40, guys, I wouldn't be in a rush to short it because it could also break out. And if we do break out here, guys, we get that little gap to fill all the way towards 43, another little buck in shop's tank. So again, most of the time, guys, it fails at these levels. I don't want to be the first trader in, but at under 40, that's when I think it could successfully pull back, right? Under this 40.68. As long as we hold it, I want to pay attention, guys, if shop breaks out of 42.49 and fills that gap to 43.91. That is simply, guys, my setup here in shop. Very strong, she's up 11% today, absolute monster. But again, guys, follow what happens over and over, but don't be the first person in because at some point it will change. And that is why we wait and see and we be ready to react. If it pulls back, guys, and holds, it could be a good dip buy back towards that key level and then potentially filling the gap. If it breaks underneath, retests, and rejects, well, then I think we get a good short like we've seen over and over and over. But time will tell, team. One of my favorite setups here. Another setup, guys, is Amazon. This has just been another monster stock ever since they reported earnings. They had a huge explosion on earnings and broke into a major zone where they have a gap fill here all the way. Let me get a better job of that screenshot. All right, guys, I have a major gap fill from 130.76 all the way to 140.3. And you can see for today's session, officially filled the daily gap. Love it. Exploded, guys, on earnings and has been holding one of my monster levels of 133.57, just repeatedly dip by, dip by, dip by, dip by, dip by. Just a matter of time before it tries to break out. Finally got it today, moving with the market. So from here, guys, I want to watch very close attention to Amazon. It could be a great compass, and it can also be a great trade, where if it does break through this 140, we have the 200-day simple up above here, near 146, and also a monster key level on Amazon near that 154.94, just to show you guys on the daily chart here. There we go. All right, you guys can see this monster wick right here. That was the highest we went on the day of earnings, and then we gapped down off a cliff. So we have filled that entire gap, getting back to it, and if we clear it, I want to try and get the high of that candle, which is also the 200-day simple moving average, a stunning target indeed. So again, guys, I want to be patient on a lot of these things and understand the risk. They have exploded. They are near the highs. So ideally, there could be a pullback at some point, but just being smart with it. Or again, you don't need to buy the high. If it breaks out and retests and holds, maybe that's your entry. If it fails here and pulls back, maybe finds its feet, maybe you give it a shot. But again, guys, pay attention to Amazon. Above that 140-ish, very bullish. Underneath it, again, maybe it just goes back into here and chops. Time will tell. we really want to watch what happens at that 140, seeing if we get mission 200. Another setup here, guys, is Roku. So this is one that has been, very much like a shop where it's held a zone, held a zone, held a zone, held a zone, failed a zone, failed a zone over and over and over. Recently, guys, on earnings here has completely destroyed that zone, hit another major one, and has actually found their way back above that key resistance for the first time here. Yesterday, they kind of got to the top of it and were right near that 75, opened under that 75 today and got back above it here. So not a major fan of Roku, guys, to the upside, but I do want to listen and follow, the chart on Roku, or if it does start to hold this major zone again, I want to see if it can not fill the gap, work towards the daily 21, which is back towards that 84. And actually, not to correct myself, we do have a gap to fill here. Right back, guys, towards, what's the low of this? 83.81. All right, so getting back to the daily 21 is essentially filling that monster gap. Will it get there? Time will tell. But I think if it holds above 75, that would logically be the next journey. From here, it could start to fail nicely. Who knows? Not going to try to push Roku's buttons too hard. But again, guys, here's what I want to watch in both directions. I want to start to watch the structure that's been creating off of the lows, where even if it does hold here, fill that gap and hit the mean, it could be something that sells off towards that again in the next few days here. We'll see. But again, generally speaking, guys, above 75 should fill that gap and revert to the mean. From there, it could fail and come all the way back and maybe even offer another dip buy at it. If it breaks it, could end up falling off the cliff at some point, right? But got to follow the chart, guys. If Roku stays above, see if it goes higher. Underneath this, could really start to sell off. But I like this chart. Let's see, another one for you, Tesla. So again, guys, Tesla has reported good earnings, absolutely exploded, huge breakout, and now they are officially back at the 200-day simple, this big blue line. So again, guys, the catalyst for Tesla is the 3-to-1 stock split vote on Thursday, like we covered for the shareholder meeting, and then also the Senate having their EV credit vote on Friday. Two things that can impact Tesla. So generally speaking, guys, not sure what could happen here. It could absolutely explode. It could absolutely dump. It could gap up. It could gap down. Who knows? So I'm just going to cover generally a little bit of a map here on Tesla, and we'll see which direction it decides to take and what impact it could have in the market. So again, guys, I have no clue what they'll say, no clue the reaction, but generally speaking, if it holds 900-ish range around that 200 level, I want to see if they can get to that 935. And then I have targets of 955 and 973. From there, you can focus on psychology of 1,000. But these are my true levels and true targets. Underneath 900, well, then I think guys can go back to 867, right? Right around this call it 880 to 867. From there, guys, again, I don't know how bad this might go. Might go really bad. I'll be looking for 840-ish to 850. And we still have the mean way below, but that's a bit extreme here. So again, guys, Tesla might do nothing. It might hit the 200 and chop, chop, chop. But if it holds this 200 range, it can be a bullish candidate. It could also go sideways, just like it did today. We'll see. We'll see. That's just one setup, guys, that I wanted to share my levels on. Let's see. That was everything I wanted to cover. Shop, Amazon, Tesla, Roku, covered the indexes, covered VIX. With that being said, guys, that is your midweek update from the Chan Man. I hope you found value. As always, guys, if you haven't already, we'd appreciate a subscribe, a like, a comment, anything, guys, to spread the hard work. But again, I appreciate you guys. Finish the week strong. And yeah, cheers.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.